3 months ago, Wall Street said software was dead. 2 trillions were wiped out. They called it the software as a service apocalypse. And just now, software had their best month since 2001. Here's what actually happened. Let's rewind. Anthropic, yes, the AI company launched a tool called Cloud Cowork, a tool that doesn't just assist workers, it totally replaces them. It executes entire workflows on its own. And 285 billion were lost in software market cap in a single day. Salesforce, Workday, ServiceNow, HubSpot, all of them down double digits. By mid-February, the total damage was over $1 trillion. And Wall Street had a name for it. The software as a service apocalypse. The fear is simple. If AI can do the job, why pay for the shit? And then, fast forward to this week, Salesforce reports earnings. Revenue, 11.1 billion. Beat. Profit, 388 per share versus 296 expected. That's a 31% beat. And then, guidance for Q2, 11.27 billions to 11.35. Wall Street wanted 11.36. That's $100 million miss on an $11 billion quarter. Stock barely even moved. Months ago, that number could have sent it down another 10%. Something changed. Now, here's what I think changed. The panic was real, but the market realized the companies that are supposed to die are the same ones building the AI products. Salesforce AI product, Agentforce, hit 1.2 billion in annual recurring revenue. That's up 200% year over year. They processed 3.8 billion agentic work units in one single quarter. That's not a company dying, that's a company that got scared into moving faster than it could have otherwise. The software as a service apocalypse isn't killing software, it's forcing it to evolve. Now the part that matters to your portfolio. Not every software company is the same, and that's exactly the mistake the market made in February, selling everything all together. ServiceNow pivoted to outcome-based pricing. Instead of charging per seat, they charge per task completed. That model doesn't get hurt by AI, it gets better with AI. Salesforce bet 300 million on Anthropic AI token usage. Their CEO said it publicly. That's not a hedge, that's conviction. The losers are the companies still counting seats and hoping AI doesn't reach their customers. The winners are the ones that made AI their product. And that's the only question that matters. Company by company. The software as a service apocalypse isn't over because software survived. It's over because the weak ones already got exposed. In the next 6 months, watch which companies actually deliver. That's when you'll know who to buy.